I'm going to be sharing what are the most common questions that I've been getting during the course of the Value 2022 conference so far. We've had some amazing sessions, some amazing guest speakers. We've covered a lot of content, and some of it's felt like 100 miles an hour in terms of trying to get all the content in the 6 hours of training so far. And I still wish I could have covered more, but it's, lots of great questions. So I'm going to deal with some questions that came in over the last couple of days that I've not addressed yet. And I'm also going to then deal with my live audience here, what questions they've got. So my first question I got that I'm going to answer was Andrea Halliday asked this question. She said, once you've established your value price for your client, how often do you review it to ensure that it's still working for both parties? And what about fast growth companies and or seasonal fluctuations? Okay, Andrea, that's a great question. So as an absolute minimum, you should review your prices with your clients at least every 12 months. Every year, you must reprice clients every single year. Because, firstly, there's something that you may have heard of called inflation. Prices go up from time to time, so we have to put our prices up regularly. Secondly, we have to do it because we're always, as we grow as professionals, as we learn more stuff, we can create more value. I know that if I'm working with someone right now, I can deliver more value today than I could when I first started in business. You create more value. And thirdly, your clients' needs and wants change. Where they are today is different to 12 months ago. They may want different stuff. There's different things that are important. So we have to change our prices at least every year. And here's the thing. When you change your prices at least every single year, people get used to it. It then becomes an easier conversation. They are expecting it. But actually, going back to Andrea's question, she says, how often do you review it? And what about fast-growing companies? As a minimum, once a year, but actually you should change your price whenever something changes. So in the conference, for example, we talked about scope creep or scope and scope creep, and Jessica did an amazing session, and we need to assess scope of everything. And sometimes scope changes. If, for example, we are pricing bookkeeping work and the client grows, and they've got more transactions, we have to reprice them. And that could be after just 2 or 3 months. And so Andrea then said, so what about fast growing companies? Well, what we have to do is just make sure that in the pricing process right up front, when we give the price, we need to explain to the client what it's based on, the scope. And we need to explain what happens if the scope changes. What happens if they grow? What happens if the number of transactions changes? We need to let them know in advance that if they grow, that's great, we will need to change the price. And at a more advanced level, as you become a more advanced pricer, at the pricing process, if you have a system that enables you to tell that client what the price might become when that scope changes, then when it does happen, it's an easier conversation because the client now expects it. They understand and they'll know that if they've grown, the price will go up and by how much. So Andrea, that was a great question. Hope that answer helped you. The next question I got yesterday, it was Amy Richardson. Amy said, is creating a course for clients a way of adding value, or should this be used to capture the lower end of the marketing that can't afford your service? And I thought this was a fascinating question because we weren't actually talking about courses, but I get the impression that Amy is quite switched on. So if I understand the question correctly, what Amy's thinking of is creating a course, and I don't know if that's a video course or a series of workbooks or audios, whatever. But if we could create a course, is that a way that we can add value to clients? And the answer is absolutely yes. The great thing about creating resources, valuable resources, training videos, audio learning, workbooks, etc., it's a way for us to add value to our clients in a way that doesn't involve our time. So the traditional accounting model is we swap time for money. We have to work longer and longer hours to work with more clients and do more work. But if we can switch our thinking to how can we take our knowledge and scale it in other ways, and I talked about today about one thing we could do is run a business club. Another one is, as Amy says, we could create courses for clients. We could create some video courses to add value. And we could use it to add value to all clients, or it could be, we talked about different packages. It could be your premium accounting package, your premium bookkeeping package, whatever. Your premium package, your top package includes a training course, resources, which means we create more value without having to spend more time. But she also went on to say, or should this be used to capture the lower end of the market that can't afford your services? And you could do both. You could create a course. Let's say, I'm going to use business advisory as an example. So it may be that you want to start doing more business advisory. And you want to work one-to-one or in small little workshops to help people grow a more successful business. But you also could build a course around that, a structured course. And that course could be given away for free to add value to people that you do advisory work with. But you could also put a price tag on that. And so for those people that want advice, need advice, but can't afford your business advisory, which may be $400 or $500 a month, perhaps for $40 a month, $50 a month, they can have a course that they can work through. So interesting question, that one, Amy. Thank you for it. The next question is actually one from somebody who's here with me live, and that's Linda. I think I actually answered it earlier, but I'll repeat it. She says, Linda says, I'm reading Predictably Irrational and wondered if you have read it. Great case studies about price psychology. And yes, I have read it. I mentioned it earlier. This is my copy of it. This is a great book to read. Anything by Dan Ariely is a great book. He's a behavioral economist. And one of the things he studies is how we make decisions. And one of the things he demonstrates is that we are highly irrational in our decision-making process. And this is just a fascinating book. It's not about pricing. But there are a couple of things in here that do impact on the way we think about pricing. So a couple of things that I recall, Linda, and I haven't read this for several years, so correct me if I'm wrong, but I know he talks about a really interesting idea is the idea of decoy pricing, where you create a third option, which is a decoy. Another thing he talks about is the experiment he did, and we talked about earlier today about anchoring, and he did a really interesting experiment at one of the universities that he was a professor at, where he asked people to assess what they would be willing to pay for various objects. But before he did that, he got everybody to write down the last 2 digits of their, what do you call it in the US? In the UK, we call it national insurance number. Anyway, their number. And the interesting thing he found from the study is that the higher those 2 last digits were, the higher the price people put as they were willing to pay. It was a really amazing demonstration of the power of anchoring. So yes, Linda, I have read that book. And for anybody who hasn't read Predictably Irrational, I think it's a really powerful book and a fun book to read as well. Okay, next question that I got. Linda says Social Security. Thank you. Next question was from Wendy is it Stienen or Steinen? I'm not 100% sure. She's from the Netherlands, and she also, I love this lady because she joined the Value Pricing Academy yesterday before I even told her about what she gets. She was that much of an action taker. Yes, I want in. And Wendy said, how do you transform this new way of pricing to 200 clients in a short time? So I'm assuming that Wendy's got 200 clients right now, and she wants to reprice them fast. So the good news is, Wendy, is now you're a VPA member. That's really what the 5-week course that you get access to straight away is. Quick wins and repricing clients. I walk you through a process of repricing clients. And this is what I had to tackle when I was running my accounting firm back in the 1990s. I discovered value pricing at late 1999. And then in 2000, I realized I had to bite the bullet and reprice my existing clients. Like you, Wendy, I had over 200 clients, and I had to reprice them fast because I'd been crazy cheap, crazy low prices, and I had to figure out a way of how do I get my prices up. And in an ideal world, I said today in the Value 2022 conference, today I said that you want to have a face-to-face meeting to get the best price. And you certainly should do with every brand new client going forward. But the challenge is, if you've got 200 clients right now where the price is too low, you need to reprice them. To meet with 200 clients and have a pricing conversation we just haven't got enough time in the day to do that. And that was my conundrum back in the year 2000, 2001. So I created a process which I call the contract renewal letter process, which is a written form of communication where you write to your clients, and in that communication, there's a structure in the way that you do it. You say things in a certain order. And that's a process that, for me, enabled me to increase my price by 20% with almost no loss of clients. I've been teaching that since for the last 20 years now. And Wendy, that's what you'll get in the Value Pricing Academy in that 5-week training course. It's also what other people have talked about, guest speakers during the Value 2022 conference. It's also the subject of a week on Wednesday, 2 weeks today. That's the session that Stanley Dean will be doing, where he'll talk about how he repriced all of his clients. So Wendy, that was a great question. And because you're in the academy, you're going to get all that training over the next 5 weeks. Right, next question was from Anna Calderon. I hope I pronounced that right. Can we still get the VIP recordings? I couldn't find the link to purchase. I'm going to mention this tomorrow. So when you registered for the Value 2022 conference, recordings aren't available, but we gave you the option to upgrade to buy the recordings. And tomorrow, day 3, I will remind you during the conference of the link where you can get the recordings. And the other way to get the recordings is if you join the Value Pricing Academy. We will be, once we've processed all the recordings from these 3 days, VPA members will get the recordings because we always give them everything. Okay, next question. Arjan Moerkerken, is that pronounced right? I hope I have pronounced it right. I want to put my packages on my website without the price, of course. Is this sensible? Yes. Okay, yes it is, with some caveats. So you correctly say without the price. A big thing that I've seen over the last 10 years is increasingly accounting firms putting prices on a website. That's a crazy thing to do. We mustn't put price on a website. We are not selling commodities. We are selling professional services. It's crazy to put price on a website. I won't go into the reason for that right now because I'm guessing, Arjan, you know that. Okay, so you've created your packages. Should you put them on the website? Yes, why not? Why not? Because then people can see the different options. However, my caveat there is we talked in the conference today about creating packages, and I showed you it in the effective pricing software. And it may be that some of your packages, you have a lot of stuff. There's a lot of great, valuable stuff. And the trouble that you have, the problem that you have sometimes is if there is a lot of stuff in your packages, you think that all the things you do with the ticks and the crosses, if there's a lot of stuff, it can create overwhelm and confusion. And what happens is if people are confused, then they don't buy. If people are confused, they don't buy. Now, if you have a face-to-face conversation with a client, you might have your pricing brochure, and in your pricing brochure you have this. You probably can't see it very well because it's the light, but you have this, no, you can't see it. I apologize. But you have this long list of things a long list of your packages, what's included. In a face-to-face meeting, you can go through it with the client. You can highlight the things that are of particular importance to that particular client. And in the conversation, you can guide them. So if I was talking to Mary, I could say, Mary, based on what you've said in your business, I think that you're going to benefit from this middle option because these 2 things particularly meet your needs. So in a face-to-face conversation, Arjan, you can walk people through your different packages. But if they're on your website and it's complicated, you create confusion. And if you create confusion, they're not going to buy. So when you put your packages on your website, you might need to keep a more simplified version. I mentioned today about the importance of a short description. Who is this package for? What's the big feature? That's critically important to put on a website. The rest of it will depend. If it's a fairly simple package of stuff, then put it all on there. But if it's complex, put a highlight, put a summary. These are some of the key things you get. There are many more things you get. And when you book a meeting with me, I will walk you through all the other amazing things we do as part of these packages. So what we want to do is the purpose of our website is to give people a reason to contact you and have a meeting with you. We don't sell on the website in our profession. We sell in the meetings. We drive people from a website to a meeting. So don't create confusion. So great question. Thank you, Arjan. Okay, Diane. Next question is Diane. I know I'm going fast. There's lots of questions. My goal is to answer every question that I can, including, and I'm just double checking. Yes, I have one question at least from the live audience, Terralyn. I will answer that. I'm not going to forget you. In fact, no, I'm going to do that now. Although actually, I think we've covered it. So Terralyn, you said, I missed yesterday on a flight home from another conference. Is there a way I can access yesterday's main stage content? I think I've covered that. So yes, there's one of two ways. We did offer a VIP ticket where you get the recordings, and they are... in US dollars, it's $97. And tomorrow, my team will share the link so you can buy the recordings if you want, or if you decide to join the VPA, you'll get them anyway. Okay, let me move on to the next question from earlier, and then I think I'll come on to a question I've got from Rob. So where was my next question? Wendy again. Wendy from the Netherlands. If I set up pricing with the software, so this is the effective pricing software, I guess they will be getting a list of tasks that need to be done in order what I promise to do for the client. Is there an easy task list that rolls out in this software, or do I need to make it myself? These questions are exactly as we cut and pasted from the box. So if grammatically there's a few spelling mistakes, I'm having to interpret what the question was. So Wendy's question is not one that I can necessarily answer, but it is a great question. We had this question in the Value Pricing Academy a little while ago where and it was a question, I think in a session that we had people like Jessica Fox doing. So the question, if I understand the question right, is we use the software to agree the package of stuff that we're doing. When the client agrees to the price and we might send out a proposal, how do we internally track what things we've agreed to do with the client and what we've not agreed to do? Now, the software doesn't do that. That's part of your project management process. And there are a few people in the Academy who have really sussed this out because they are great with systems and technology. Jessica Fox is one. And I'm fairly sure a few weeks or months ago, she asked that exact question. And we have others as well who are great with systems and processes like Teresa Slack. So my advice would be, Wendy Stienen, is if you're here now, if you go to the panel session at the start of day 3, you could perhaps ask that question of Jessica or Teresa or any of the other guest speakers. Wendy, I know you've joined the Value Pricing Academy. So the other opportunity, of course, is you could post that question into the Value Pricing Academy Facebook group, or ask that question next time you go to a live session with one of those other trainers, and they'll tell you the systems they use to do exactly that. Okay, next question. Next question was from Shannon Harrison, and she said, what is the y-axis? Number of transactions, question mark. So Shannon's referring to yesterday, we looked at fixed pricing. We looked at how we create a formula for a fixed pricing. We looked at this idea of using regression analysis, and I showed some graphs and charts and so on as we went through it. I was using, as an example yesterday, annual financial statements. But you could apply the same regression analysis to working out your pricing formula for any service, payroll, bookkeeping, tax returns. So yesterday in my example, on the y-axis was, because we're looking at annual financial statements, was annual turnover, annual sales of our client in thousands. But actually the more general answer, Shannon, is what goes on the y-axis is whatever you decide is the primary scope factor. So if it was bookkeeping, then arguably the primary scope factor is number of transactions, and that would therefore be on the y-axis. Okay, thank you, Shannon. I'm going to go and answer a question that came in on the live feed from Rob Brill, I think. Let me just read this first and see, because I've not read it yet. Rob says, with raising prices, do we need to remove the expectation that we will not lose any clients? Is it inevitable that we will lose clients along the way? How do you deal with that? Okay, Rob, that's a great question. So I think Teresa said in her session yesterday, she said one of the things that really helped her with the mindset with this was something that I told her, and I often teach, is that, imagine this. I know that we fear putting price up with existing clients in case they leave. We fear clients leaving. And so there's a number of things to just, from a mindset point of view, to think about. First of all, do the math. If you put your price up by 20% and you were to lose 20% of your clients, then mathematically you make the same amount of money. Because if you take your sales, let's say 100,000 is your fees, and you put the price up by 20%, that's now 120,000. But if 20% of clients leave, we then multiply that by 0.8, and I think the maths are 96,000. So our fees go from 100,000 to 96,000. Not a big difference. Our bottom line profit is not much different. However, because we've got less clients paying higher prices, we're making the same amount of money, but with less clients. So if 20% of clients leave, assuming they're representative of the size of the clients, you've just freed up a day a week. You're now working a 4-day week for the same money. So we have to recognize that actually losing clients might not be a bad thing. Second point, though, is I have, in over 20 years of teaching repricing existing clients, I have not yet found any firm ever say to me, I put my price up by 20% and I lost 20%. Usually it's about 5%. And a big reason for that is because of lock-in, stickiness, loyalty. In other words, if, let's say, Starbucks put their prices up suddenly by 20% overnight, well, people could very easily switch to Pete's, Costa Coffee, or another coffee chain and get a similar cup of coffee. But we're providing a service, and you are unique. We're in a people business. Your clients buy from you because of you. They can't get you down the road. They buy because of you. And so if you put your price up, it's difficult for them to leave because they've got to start a brand new relationship with a brand new accounting professional that they don't know and may not get on with. Now, there's the better the devil you know type of thing. And so there's this stickiness that we have in our profession. There's this stickiness that keeps people loyal, that stops people wanting to move on. And that's why I've never come across a situation ever where somebody's put their prices up and lost the same percentage of clients. In fact, very often people say no clients leave. And the next thing we have to think about, Rob, as well from a mindset point of view is, okay, so let's say we do put our price up by 20%, and let's say 20% do leave. Which clients are going to leave? Because when you think about your clients, you're going to have some clients that love you. They get on so well with you, they get so much value from you, they think you're brilliant, and you love working with them. The clients that value you are the most likely to stay. At the other end of the spectrum, you probably have some clients you don't really like. The clients always complain, they moan, they whinge, they stress you out. You don't really enjoy having a meeting with them. The pain in the arse, the pitter clients, the pain in the arse clients, we all have those clients. And those clients are really draining our energy, and that has a huge implications on our firm. When our energy is drained, we lose our motivation. Oh, I've got to see Bob next week, and he's always complaining. And then we end up worrying about that and not being productive and performing at our best. And so we can't afford to work with people we don't like. Life is too short to work with people we don't like. And so we are better off not having them in the firm. And so if you've got people that complain, whinge and moan, and you put your prices up, they're the ones that are most likely to leave. When you put your prices up, what happens is you improve the quality of your client base. I told the story of when I did this back in, I think it was 2000, 2001. I did some analysis first, and I looked at my client base, and I realized that actually the smallest, the bottom 40%, if I lost all of those 40% of small, annoying clients, I could replace that with one or two great clients. And I was starting to win better quality clients because I was focusing on the right client. And so I actually hoped to lose 40% of my clients when I put my price up by 20%. I couldn't get rid of the buggers. 5% left, but 35% that I wanted to go stayed. So a year later, I put the price up by another 20%, which is 44% over 2 years. So Robert, I hope all those thoughts help. If you're going to put your prices up, then if you do it the right way, the way that I teach, then you probably won't lose that many clients. But do the math, crunch the numbers, and it's different from firm to firm. I don't know how many clients you've got. If you've been in business for a year, you've only got 10 clients, and you need all 10 to make ends meet, then you might be a little bit more conservative in the way that you do that. But if, like the question I got earlier from Wendy, she has 200 clients, she probably has got way too many. And I would say 200 clients is way too many. I personally believe, this is my thought, is that if we want to create value for our clients, if we want clients paying us premium prices, the most value that we can create for our clients is when we meet with them and talk to them, when we give them advice. There's so much advice that we can give to clients. The hour that you spend at the end of the job giving some advice on how to reduce taxes, reduce costs, increase cash flow, the hour that you spend giving the advice is more valuable than the 20 hours you spent crunching the numbers. That's where the real value is, in that extra. And so if that's where the real value is, what if we met that client for an hour every single month? Then we create much more value. If you've got 200 clients, you cannot afford to visit and talk to every client every single month. You just got too many. And so you probably don't have a monthly meeting with any of them because you're so busy firefighting, reacting, trying to get all those tax returns done, the bookkeeping done with 200 clients. If you have 50 clients, you have the time to meet with them regularly, to talk to them. I know a client, an accounting firm I worked with in the UK for many years, and he had client managers, and he had a rule. He said that a client manager wasn't allowed more than 20 clients. And I asked the question, why 20 clients? He said, with 20 clients or less, you have the time to meet with them regularly. With 20 clients, you have the time at random intervals to just pick up the telephone and say, hi, Bob, I was just thinking of you. How's it going? Wow, that shows you care. What does Bob think? Well, my accountant cares. He just rung me. He just asked how I'm doing. But this guy, his name was Robert, he said to me, what I found is that when my team make a proactive, unexpected telephone call or drop in and say, I was just passing, Bob, how's things going? A, the client loves it because they cared, but about a third of the time, 1 in 3 visits or phone calls would result in, do you know, I'm so glad you've actually called. I'm just struggling with this at the moment. Is it something you could help with? And they ended up selling more work to clients. The more time we work with our clients, the more they buy more stuff. So it's a good thing, Rob, to lose some of our clients. If you've got 200, if you've got 10, perhaps not. But I hope that makes sense. I hope those thoughts help. Okay, let me now move on to the next question I got. Jonathan Bird. Jonathan from Romford, if I remember right. Jonathan Bird said, how do you narrow down to find the ideal client? So great question there, because I talk a lot about ideal clients are so important, having a niche and so on. And Jonathan, we do a lot of training on that in the early stages of the Value Pricing Academy as part of that core training, how to build an extraordinary accounting firm. But let me just give you a few thoughts for now. So you need to have an ideal client. And one of the ways to do that is look at your existing client base and say to yourself, which of these clients do I love working with? What are the clients that I love working with? A process I went through back in the year 2000 in my accounting firm. I had over 200 clients, just like Wendy, way too many clients, 200 of them. I went through a client grading process where I graded them A, B, C, and D. And that helped me to identify which ones to exit from the firm. But I then looked at the A-class clients and I asked myself, okay, so what is it about the A-class clients I like? What are the characteristics? Is there a particular size, personality, industry they're in? And that was the starting point of me narrowing down my ideal clients. I looked at my A-grade clients and said, right, that's the sort of clients I want more of. What is it about them that makes them ideal? Okay, how are we doing for time? Okay, we're doing pretty good. We have officially 10 more minutes. I will go on longer if there's questions. I will come back to the live audience again and see if there's any questions. But here's another one that I got yesterday from Andrea Halliday. If you already have a very full value service for your clients, how do you add more? Okay, this is an interesting question. So I talked about yesterday, I mentioned adding value, and I talked about how with everything you offer, you should be able to be creative and come up with more ways to add value. But sometimes people say to me, yes, but Mark, I already offer a gold service. And one of the things I notice about our profession is, and this was me again in my accounting days when I ran my sole practitioner firm, is I realized I was selling, to use a car analogy, I was providing my clients with a Rolls-Royce service for the price of a Mini. And I think a lot of people fall into that trap. And it's because we're nice people and we want to deliver great value. What we often do is fall into the trap of giving so much value to our clients, but at a low price. And if that's the case, we have to change. You have to have an honest conversation with the client. And we touched on it today about this idea of how you can use menu pricing for repricing existing clients. And I talked about how the entry-level one might be what they got last year, but with stuff taken out. And so if you're already doing too much stuff, just take more stuff out and leave it in the premium one and then let the client choose. And just explain, be honest, look, and say, we've been giving you a premium service, but one of the things we haven't done is you've always had a low price. And so we have a couple of options. You can keep the price, and this is what we can do for that price. If you love the extra stuff we do, here's a couple of options, and you choose. Always let the client choose. Put them in control. They can choose, and they can decide if they value the stuff that you do, they'll pay the higher price. And interestingly, and this goes back to, I think, the question from Rob as well, and I found this in practice, and I've had many people I've taught this process say the same thing, that where some clients, when you reprice, some clients say, I wondered when you'd get round to doing that. I knew you were too cheap. A lot of our best clients know that we're not charging enough and they're expecting a price rise. Right, next question that I want to deal with. I'm just looking. I'm just reading an update to the question I did with Rob, just to check it's not a question for me. Okay, yeah, Rob made another comment there. It wasn't a question, but it's a worthwhile comment. He said, with the repricing and expecting to lose some clients, it's hard to lose them sometimes. And I think what you mean, Rob, by that, and I understand because I was in practice, is I had lots of small clients. They weren't ideal clients. I had lots of subcontractors in the building industry, but I liked them. And so sometimes we have clients that we know they're not ideal, but we just get on with them. They're nice. And we have to divorce ourselves from this. So I mentioned about that exercise I went through of grading clients. And what that enabled me to do was to really step back and take a holistic view. On an Excel spreadsheet, I put all the clients and the fees they paid, and I ranked them and so on. And I looked at the numbers and I said, I need to lose the bottom 20%. And In my case, I wanted to lose the bottom 40%, and it was the smaller clients. It was the subcontractors, the taxi drivers, the corner shop owners, because yes, I liked some of those, but they weren't where I wanted to go with my firm. I wanted to go more down the route of business advisory. I wanted more clients that were $500,000 to $2 million, owner-managed businesses running a limited company. I came from a tax background. I could help them save loads of tax by restructuring their company, and I could help them with growing their business. That was my ideal client. And I couldn't help ideal clients when my time was spent also dealing with subcontractors, taxi drivers, corner shop owners. So I had to step back holistically and divorce myself from the relationship and just look and say, look, no, this is the way I want to go in my practice, and I'm going to have to let some people go. Okay, I know that wasn't a question, but I hope that helps in some way. I think I've answered all the questions in the Q&A box at the moment. Yes, I think I have. Wendy's here. Got a smiley face. Okay, let's move on to the next question. It was from, again, another question from Andrea Halliday. And she is a scope creep question. So she says, how do you bill for it without nickel and diming your customers to death? That's a really interesting question. So one of the points that I might have mentioned, actually, no, I didn't. It was in passing, I think, yesterday. But one of the things that we are terrible at in our profession, and is we do too much stuff for free. So many things that we do for free. We've got the client's books and records to do their annual financial statements, and then they ring up and say, hey, Mark, I'm just in the process of buying a new house. I need a mortgage. I went to see the lender, the bank, and they said I need to have a mortgage reference letter from my accountant saying how much money I'm making. I know you've got my records right now. Can you just do this? And I would say, well, I've got the books. Yeah, let me do that. Send me the form. Send me the form that wants filling in. I'll do it. And we do that because we just want to be helpful. But actually, those things, the little things add up. And we give so much away for free. I teach in the Value Pricing Academy. One thing I teach is a common thing that we give away for free is where a client wants to move to a cloud accounting system. They want to move from a desktop system to QBO or Xero. And I've done research for the last 8 years now, and consistently a third of the accounting profession will do that for free. They'll set people up on QuickBooks Online or Xero for free. Why? That's valuable to move people from a desktop system or an Excel spreadsheet and put them on a state-of-the-art cloud accounting system. There's a huge amount of value there. So why do it for free? I teach in the Value Pricing Academy, one of the sessions, the how-to Thursday sessions I teach in a couple of months, is how to price that service. And I have people that are now charging $1,000, $2,000, $3,000 for setting people up on a cloud accounting system with no pushback, no reaction, because there's huge value there when we do it in the right way. So we give too much away for free. We have to charge for these things because these little things add up. But as Andrea correctly says, could that not come across as nickel and diming? And my answer to that is, yes, it can. But whilst you are charging too little, and most of us are too cheap, we're working crazy hard, not making enough money, and that means that we have to stop doing stuff for free. Otherwise, we're going to go mad. Just keep working hard just to make ends meet. Now, ideally, what you want to do, though, is as you get better at pricing and pricing your clients, yes, when you price a client, you want to, as Jessica said yesterday, Jessica talked about you have to have clarity in your proposal, in your fixed price agreement, clarity over the scope of the work and clarity over what's not included. And make it very clear that other things they want, they pay for, and tell them what's outside the scope. But at the same time, as you get better at value pricing, you will get better prices. And when you get to a stage where a client might have been paying you $5,000 before, and now they're paying you $10,000, $15,000, as you get better at value pricing, whilst you should charge those little things, you can because you're getting a great price, perhaps 2-3 times the price you're getting before, you now can afford to do extra things to wow the client, to add great value. Right now, you can't afford to. Right now, you're working crazy hard, not making enough money. You have to stop giving away stuff for free. But as you move on this pricing journey and you start getting better prices with your clients, you heard stories today from Jane Aylwin. You can get double the price, 3 times, 4 times the price. When you're getting better prices, you can afford to do more for your client. You can afford to do as extra things. But even when you do that, let the client know what you would normally charge. And I have scripts for that. I teach in Advanced Tuesday. I teach scope creep and how to eliminate scope creep and the words and the scripts that you should use. But hopefully, Andrea, that helps for now. Right, I have a message, by the way, that says you now have time to visit the expo booths because, strictly speaking, we are supposed to finish the breakouts. However, and it is 8 o'clock here in Portugal, it's dark, I'm hungry, but I do want to carry on and answer a few more questions. So it's entirely to you. If you want to carry on listening to the answers, if it's valuable, then please feel free to stay. I will probably give it another 5-10 minutes and then we'll close down because I said I want to answer as many questions as I can. Sharon says, Sharon Ambros, is that right? In a bookkeeping business operating with value pricing, are bookkeeping employees still paid hourly? Is there another method of calculating their compensation? That's a really interesting question. I think that we have to look at pricing and costs separately. So we're talking about value pricing. Value pricing means we price based on the value, not based on costs. But nevertheless, in our business, we have a cost structure. We have perhaps some rent for our premises. We have employees. And it's normal for team members, employees, to be paid monthly salaries, weekly wages. And so that's fine. That's just because we've moved to value pricing doesn't mean we have to change the way that we pay people, because they're two different things. However, what we can do is one of the things that increasingly is being talked about in the profession, and I think is really powerful, is something that's referred to as the results-only work environment. And this is about, rather than paying people for the time they spend doing something, we pay people based on results. And that means that rather than saying to our people, you have to work 9 to 5 and you can only have 4 weeks holiday in a year and be very rigid about it, instead we say, okay, this is the salary we're paying you and you can choose how long you work. As long as you get things done, this is what we expect from you. This is the results we expect. This is how many clients we want you to work on this month. This is how much we want to bill. And we don't care how many hours you spend or whether you work from home or in the office. We don't care how many holidays you take, as long as you get the work done and the clients are happy. And so if somebody is a team member who is great at delivering amazing work for you, their clients love them, then why should they be chained to a desk from 9 to 5? Anyway, it was a great question, Sharon, and I think that's a great question you might want to ask of other people in the Value Pricing Academy, because some people are looking at things exactly like that. Okay, I had a question from Maria Ortega, which I didn't actually understand, so I can't really answer this, but she said, how can you create more value in cash accounting? So I'm not sure what she meant by cash accounting. So forgive me, I struggle with this a bit. I would probably need to understand a little bit more. So I'm going to skip over that one for now. Okay, I have a few more questions that came in during the course of the day, which are new to me. So they might surprise me. I have no idea what they are. Let's see what they are. Andrea's been asking lots of great questions. If you're not tracking time, what are some of the other KPIs that you use? Great. I stopped keeping timesheets in my accounting firm in about 2001. So I had to figure out what else do I measure. With value pricing, there is no place whatsoever for timesheets when it comes to pricing. We must price based on value. Time is irrelevant. Costs are irrelevant. But I know that some people like to keep their timesheets, even when they think they're value pricing, they want to keep their timesheets to measure things. That's up to you if you do that. My friend Ron Baker, we were talking about this a couple of years ago, and Ron's of the view that if you keep timesheets, you cannot possibly value price. And I think he's right, in as much as I think the problem with timesheets is it becomes a crutch. In other words, when you come across something that's difficult to price, like cleanup work, for example, then it's too easy to fall back on the timesheet. If we don't have timesheets and we have something that's difficult to price, we are forced to be creative. We're forced to be creative. So I'm not going to tell you to ditch the timesheets. That's entirely up to you if you want to keep them. But I got rid of them in my accounting firm, and having experienced a firm with and without, if I ever ran an accounting firm again, I would never use timesheets. They were pointless. I came up with different measures. So what did I measure? I measured things that were more important to the client. I measured things like how happy was the client. I measured things like how happy were the team members. I measured things like how many new services did we sell. I measured things like how many referrals did we get. And I also measured each individual client manager had a billing target. Did they meet their billing target, yes or no? And as long as they hit it, I don't care whether they worked with 5 clients and hit 100% recovery rate on all 5 of them, or whether they worked with 5, 2 of them, they got an amazing price, were really productive, 3 less so, but it all worked out, they got the same target. As long as they hit the targets, as long as the clients were happy, the clients were so happy they referred more work, then they were the important measures. I hope that helps, Andrea. Sometime when we've got more time, we can do a session perhaps on KPIs and see what other people in the academy do. Right. The next question is from Andrew Gunn, who's not asked. This is the first question from Andrew, and I'm not sure. What are your top 3 tips for coaching your team when in a price negotiation with a client or prospect? I think that's an interesting question. I don't know the answer. I need to think about that one. Off the top of my head, my thoughts would be, first of all, make sure you know how to do it first as a business owner. Put in place the systems and so on. And then what I would do is, when you know how to price, one of the things that back in a long time ago, before I started my accounting firm, when I was a trainee accountant in a multi-partner firm, the partner I worked for would always involve me in the client meetings. And I learned so much from sitting in, and this was before I qualified as a chartered accountant. I learned so much by sitting in on the client meetings and listening to how the partner dealt with things. And so very soon after, when I qualified, I was in a multi-partner firm. There were lots of people that were going through the training contract. I was the first person let loose with my own clients. And I felt confident having meetings with clients because I'd sat in on my partner. His name was Colin. And so one of the things you could do, Andrew, is let your team members sit in, not all of them at the same time, but let them sit in on your pricing conversation meetings so they can learn. That works really, really, really well when you do that. The other thing that you can do is obviously train them. Training is critically important. And so you could, as you learn things, teach them what you are learning. So I hope that helps, Andrew. I might have some more thoughts, but I'm conscious of time and I've got other questions I need to answer. So I hope there's something there that helps. Let me see. I have a long one in front of me right now, so just bear with me a second while I read this one, because I have no idea what it is. Yeah, okay. So this one is from, is it Uyi? I'm not sure exactly how you pronounce it. So Mark spoke about determining fixed price and minimum price using regression analysis based on price and primary scope. How can a new business determine a fixed price since there was no previous price? Is it possible to start out directly from menu pricing? Okay, that's a really good question. Yes, I should have said that yesterday. Regression analysis is all very well when you've been going for a year or two, you've got some numbers to use. If you're starting from scratch, you haven't got that. So you can't do that. So one option is, one of the things I did for people who bookkeepers is I did some analysis, I did some research of 1,800 bookkeepers back in July 2019, and I asked questions about, I gave some different types of clients, what would you charge for that? And I hired a statistician to create a bookkeeping formula based on what bookkeeping firms are, how they're pricing bookkeeping work. And that's a model that's actually inside the effective pricing software that you can use as a starting point. You can use and see what other people would charge based on similar scope factors. It gives you a starting point. However, yesterday I talked about regression analysis. And I talked about that because people in our profession, we're numbers people. We like precision. Things have to be precise. And the reason people like timesheets is because timesheets feel like they're precise. We're adding up hours, we're multiplying by a rate. There's a formula there. And people like the regression analysis I talk about because, again, we're creating a formula with some level of precision. But as I also said, is that there's no formula for value pricing. Value pricing is judgment. And so that formula, that stuff we talked about yesterday, some people love that because they need that first before they take the next step. However, I encourage people to actually just jump straight to value pricing and use things like menu pricing to figure out what people value. Let me give you an example that hopefully creates some clarity here. So I showed today the effective pricing software, and I showed in there there were scope questions, there were preference questions. And sometimes people ask me the question, Mark, where do the numbers come behind the software are numbers, which you can change, you can edit, you can change them any way you want. But I give you some models with numbers. And people say, Mark, where do those numbers come from? And my answer is, I made them up. Okay, based on my experience, I've been in the profession for many, many years. I was an accountant in my own practice doing accounting work, payroll. I know roughly what the numbers should be. But they were numbers that I just picked based on judgment. Based on judgment. So that question, you might have seen that question, what's your turnover? The first question. And there was and I picked today I picked the example of a client doing 750,000, $750,000 turnover. And I said, behind the scenes is some numbers. That number was just a number that just felt right to me. And when I teach people how to use the effective pricing software, I teach you a process for how to just check you're happy with the numbers. Kim today talked about how she spent the first 8 hours learning the software and just playing with the numbers and seeing if she was happy. But you go with judgment. Because you don't know what somebody else will see as the value. You don't know what somebody else is willing to pay. In the software preference questions, remember the question I asked, would you like your primary contact to be me, the senior partner, or my assistant? So how much extra should you charge for you? I don't know. Pick a number, use some judgment and test. And I liken it to, if you think of the low-budget airlines in Europe, in the UK, we have EasyJet, for example. When you book a flight with EasyJet, they ask a series of questions, preference questions, options. Why? Because it works. And one of the questions will be, do you want speedy boarding? Yes or no, speedy boarding. And speedy boarding, there's a price. Let's say it's £25 for speedy boarding. Is that the right price? They don't know. Who knows whether it's the right price or not? But what I can guarantee has happened is they chose a price. What feels like a fair price for speedy boarding, for the privilege of someone getting onto the plane first? They'll have picked a price. And then they'll have measured it. And if it have found that over time nobody chooses speedy boarding, that's because that price point is too high. So let's change our website. Let's change our software. Let's change the system and make it £20. But if too many people choose 25, let's test 30. And that's one of the powers of the effective pricing software, is that it's a system. And systems give you a benchmark to measure against. Just like I said, menu pricing does. If everybody's choosing your premium, and I know Kim, I love what Kim said about she changed her tone of voice and everybody chooses premium. She's happy with the results, and I'm so happy for Kim. However, what I would say to Kim is if everybody chooses premium, you're too cheap. You're too cheap. You can put your prices up. You don't want everybody buying your premium. So systems, whether it's effective pricing, whether it's menu pricing, they give you something that you can test against. Okay, I'm just having a look at. Oh, okay, I might be able to finish all because my team today, by the way, was adding to. I've got these questions on the slide deck here that my team was adding today's questions when I was on the main stage. So I have no idea what these questions are. But anyway, I'll answer them because there's still people here. There's still people here live. So let me answer these, see if I can get all 4 done. Andrea, another question from Andrea. As each client has a customized service right now on hourly billing, when I build the packages, do I customize the packages to the client or do I create a standard package for all clients? Brilliant question. Yes, you make them specific to the client. So in other words, systems are so powerful and you want to systemize things. And so if there are certain core services you offer, so you have, I'm picking up a brochure here, probably an irrelevant one. Let's take payroll. If lots of clients buy a payroll service, you want to systemize the process. And that would mean coming up with standard payroll packages, a standard brochure, a standard pricing system, because you can put everyone through the same system and test and measure it. So systemize as much as possible. Every new client going forward, you would use your system for pricing tax returns. But with existing clients, you perhaps haven't for them got these standard packages because that's not the way you did things in the past. They just got all this stuff for this price. And so as you reprice your existing clients, you might want to eventually get them onto your standard packages. But given that they've had their own unique package in the past, let's use that as a starting point. If we're repricing existing client, what we might as well do is customize our 3 options to what they want. So I think the key point here, Andrea, is there is a decision for you to make as to what extent do you standardize your packages for, let's say, payroll or bookkeeping, and to what extent do you make them different for each client? The advantage of standardizing means you have systems in place that allow you to scale, allow your team to have the pricing conversations, and so on. Systems are so powerful. But sometimes you want to treat clients as individuals, particularly if they're big clients. If you've got a 20,000 a year client, then you might want to do something a little bit more specific and tailored to that particular client's specific needs and wants. So I hope that helps, Andrea. It wasn't a dead yes or no, but you can hopefully you've seen that there is a kind of there's a bit of grey there. Right, Michael, first question from Michael. A lot of emphasis has been placed on the framework template and the wording. Do you offer verbiage in other languages such as Spanish? If not, how do we ensure the strength of the wording is not lost in translation? Okay, easy, simple question. Answer is no. We do not translate into other languages. We do change the wording for different English-speaking countries. So, for example, some of our brochures we have US versions versus UK versions because in the US, they talk about accounts receivable. In the UK, we talk about debtors. In the US, they talk about sales tax. In the UK, we have VAT. So there's some different wording around some of the technical things in the profession. But we don't do wording for different languages. So I'm guessing, Michael, that you're Spanish. Unfortunately, I'm not able to. We don't have enough people who are Spanish speaking. And if I got somebody to translate into Spanish, unless they were an accountant, that person might translate and misunderstand what it really means. So unfortunately, Michael, you'll need to do that yourself. But if you join the academy and listen to the training, and when I teach you why you use those forms of words, hopefully that helps you to think, right, that's what he means. I can convert that into Spanish. I want to try and use, that's the technique I'm trying to use. Okay, Edgar Martinez, do you limit the upsell items to less than 3? No. No, the upsell, you can offer as many things as you want. And so in the software, you can do some clever stuff like it only offers things for certain packages, so you can choose what if they choose. So when I did the today, it only offered one thing because they chose the premium package. If they'd have chosen the middle package, that upsell page would have offered a number of other things that they could have taken that are normally in the premium package. Anyway, I'm waffling because the simple answer is, Edgar, when it comes to the upsell, in terms of your system, the more things that you can upsell that are relevant to that service, the better, because it gives people more choice. Not because you're expecting people to buy all those things, and in the conversation, you'll only offer the things that you know would be relevant to that particular client. So I hope that helps. And I think this is the very final question. So last question is from Maria. Do you recommend doing a proposal for 12 months in all cases on any price package or monthly option? Also, what would be the best practice frequency of payments? Okay, I think we dealt with the first question, Maria, right at the very outset. Do you recommend doing a proposal for 12 months? Yes, maximum 12 months. You should review your prices every single year. So 12 months is the maximum proposal period that you should have. But as I said earlier at the start of this session, but also let the client know that you will revisit the prices more frequently if the scope of work changes. She then says, also, what would be best practice in terms of frequency of payments? It depends, but if we're talking about bookkeeping, annual financial statements, for example, I would go with monthly, the client paying you monthly. However, there are reasons why you might want to do different periods. So if you're doing payroll and they have a weekly payroll, I would go with weekly payments for your payroll service. And the reason for that is because of some price psychology called chunk it down, which I might mention tomorrow if we get chance. If you came to the session yesterday with Elnise Husson, then she talked about it's extremely powerful, this idea of chunking down to smaller payments. And so there are situations where you might quote the price and have the payments as weekly in certain cases. Maria, I hope that helps. I think I've answered all the questions, no more in the live one. I'm exhausted. I've been going for about 4.5 hours now. I'm going to have something to eat now. It's 8:20 in the evening. So thank you for coming along. Thank you for asking the great questions. Tomorrow is day 3 of the Value 2022 conference, and I look forward to seeing you all there. We've got a lot more stuff to cover about how to create value and how to win more clients through positioning ourselves different. Okay, and I'll answer more questions tomorrow as well. I will see you all tomorrow. Goodbye for now. See you soon.